Welcome back. So we'll move into cash versus accrual accounting in chapter 2. So companies can record or prepare transactions or financial statements in one of two ways. It can either be the cash basis of accounting or the accrual basis of accounting. So the cash basis is going to recognize or record items in the books of accounting when revenue is received or when cash is received. For expenses, they're going to be recognized when cash is paid. So the cash basis of accounting with expenses. And net cash flows from operating activities in the statement of cash flows shows the cash basis net income. So it shows all the cash as received or as paid. The other type is accrual basis. Under the accrual basis, companies are recognizing revenue when it's earned. And what that means is the company recognizes the revenue once they've delivered the good or performed the services that they are to provide. And regardless of when the revenue or the cash is received. Expenses under the accrual basis are recorded when incurred. So that means that the expenses are recorded in the books of accounting as expenses are used. What this means is that expenses are recorded in the books regardless of when the cash is paid. Are required to be prepared under the accrual basis method. So let's look at example 2 to talk through how cash and accrual basis differs. So we have on January 1, a customer requesting Jiffy Painting for a quote to paint an office. On January 3, Jiffy Painting quotes $8,000. On January 5, Jiffy Painting paints the office and bills the customer $8,000. And on January 28, the customer sends a check for $4,000. Letter A says, under the cash basis of accounting, when would Jiffy recognize revenue and how much revenue is recognized? So if we go back up and look at the cash basis of accounting, we see that revenue is recognized when the cash is received. So when did Jiffy receive cash? Well, on January 28th, the customer sent a check for $4,000. So on January 28th, cash is received, revenue is $4,000. And letter B, under the accrual basis of accounting, when would Jiffy recognize the revenue and how much revenue would be recognized? So under the accrual basis, we know that revenue is recognized when earned. So that means when Jiffy delivered or provided their services. When did Jiffy actually paint the office? January 5, office is painted. And how much would Jiffy recognize as revenue? $8,000 because that's what they bill for their services.